In continuation of our agenda items for calculation of the corporate tax payable, we are now having a discussion on the reliefs available in certain transactions. So in this case, the first relief which is available is that if I am transferring any assets or liabilities within a qualifying group. So in case if I transfer any assets and I am having some gain on that, such gain or a loss would be excluded. Okay, and here the important area is that it should be a transfer between the qualifying group. So a qualifying group in short is that if there is a common shareholding and it should be at least 75% or higher, in that case such companies would form part of a qualifying group, and in that case any asset or liability, if it will be transferred between such entities, there should not be any recording of gain or a loss. Now here it is important to understand that for the qualifying group I don't have to take any approval from FTA. Okay, and it is not to be confused with the tax grouping, which we'll discuss afterwards, where we can file a single tax return and we can exclude intra group if there are any transactions also. So this concept is only for specific areas, and the conditions are that the entities would form part of a qualifying group if, of course, these are legal entities. Okay, which means individuals cannot be clubbed here, and these should be the resident entities or any non-resident entity which is having a permanent establishment or a PE in the state. Then there has to be a direct or indirect, the common ownership which should be at least 75% higher, or higher. Third condition is that if we are forming a qualifying group, there should not be any exempt entity in that. Nobody should be a qualifying free zone person also. The financial year has to be same, and their accounting standards which they use for the preparation of their accounts should also be same. If all these conditions are fulfilled, and in case if there is a transfer of assets or liabilities between such entities, no gain or loss would be it would be recorded. Next is a relief for the business restructuring. So here we need to understand an important area is that when you register in any of the taxation, you are basically registering the entity itself, unless until it is it will be a transparent entity. So this entity or let's say a company, if you are selling it, okay, if you sell this company, in that case, if you are meeting certain criteria and you are transferring your entire business or any independent part of a business which is identifiable and you are selling it to somebody else, in that case, if you earn any gain out of it, it will also not be taxable. And the conditions are, of course, most are similar as we discussed earlier, that both persons should be say residents or somebody who is having a permanent establishment in this country. They should not be exempt. They should not be included as the qualifying free zone persons. Financial year has to be same, and the accounting standards which they use are also to be same. And an important condition which is here, this important condition is that the intention should not be to avoid the taxation. So there has to be some underlying valid commercial transaction, okay, which reflects the economic reality itself. So if you are only selling just to have a tax you can say saving, it may not be acceptable for this sort of say a relief. So it is important to understand that when we are calculating the taxable income, such gains, okay, these would be included in our accounting income, and we should be excluding it at the end if all these conditions are fulfilled.